All right, hey there. Good morning, everybody. Christopher H. with Texas West Capital checking in with y'all about just a few minutes after 11 a.m. Central Standard Time here on February 1st, 2021. This is San Antonio, Texas. Don't forget, what is it? Ethereum. Uh, oh my gosh, what is it with the CME? Ethereum futures, I guess it is releasing this month, isn't it? So, if y'all thought, hey, 2017 back there in December with the Bitcoin futures opening was bearish for Bitcoin, but you don't think that Ethereum futures opening for Ethereum is bearish, I think you need to check your your bias there, your emotional tie to things. So, I'm not saying that it is for it. I'm just saying if you thought in 2017 in December 2017 that when the futures opened for Bitcoin, if you thought back then, as many people did, that was bearish for Bitcoin, then it makes no sense that you would think that Ethereum doing the same thing now is going to be bullish for Ethereum, right? So just some thoughts there. Don't forget, guys, you can join us at howtotradetowin.com. I still cannot seem to get the coupons correct, the end dates. It was supposed to end yesterday, end of the month, but I guess somehow I made it today. So anyway, if you haven't done it yet, jump on it while you can. You get 25% off of any of your memberships there, guys. Right now, a lot of people have taken advantage of that. We've got a lot of new people that signed up over the past couple of weeks, which has been great. And then they find out, wow, we've got so much content. They usually end up messaging us and saying, okay, where do we start? Because there's just too much out there to begin with. I need to know where to look first and then how to branch out. So if you guys are new and you found yourself in that position and you haven't yet, you could always DM myself or Adam Harris or Scott Milker, and we'll direct you out. Basically, the idea is pay attention to the videos we have first. We've got tier 3 videos, and then we've got our regular, basically full market educational videos. Both of them, they have their own channels there in Discord. You can watch those first if you're tier 3. The second thing is the chart request. That's where you request a chart, and then I post it in the requested charts channel. And so that would be the second place to watch it when you first come in. Other than that, hang out in the Bitcoin chat room. We got a lot of stuff going on there and a lot of education there from a lot of our traders who are more than happy to help you understand why they're looking where they are, what things mean, answer questions and whatnot. So there you go, guys. Anyway, so today's it. Today's the last day to get it, so get it while you can. And you'll be able to lock in stupid low rates, especially if you get a larger, if you sign up for biannual or especially annual package. The discount overall with everything is just huge. It's not just 25% off the monthly, because anytime you buy more than 1 month at a time, we have our, our monthly, our quarterly, our biannual, our annual packages in there. And each one gives you more and more lower and lower average cost for your monthly. So then you get all that anyway, plus you get an extra 25% off. So it ends up being, guys, about 50% off, a little bit more than 50% off, rather than if you were paying monthly on tier 3 every month. You would save about 50% off of that with the coupon we have today. So anyway, jump in there and do it, guys. We'd love to have you there. So much stuff. So much stuff. Let's see what's going on with Bitcoin here. I'm going to say hi real quick. Sir Holt is in here. Hank is in here. We're looking at, Hank's talking about the potential inverted head and shoulders on the DXY, potentially playing out there. Let me see here. Data, what's going on, man? GT is here, checking in from Washington. Good to have you checking in. Nevlusian's here. Martin, what's going on, man? Rick is checking in from the Netherlands. Man, I love, it seems like we're growing a larger and larger audience out in the Netherlands, which I love. I've met so many really great people from out there. I mean, online I've met them, but nonetheless met them, and it's a pretty great country, it seems like. So love that we're kind of growing out there. Let me see here. Yask, why don't we call you Yask? Because I can't really read the rest of it there. I've got bad eyes. I'm old. It happens. Hey there, White. What's going on, man? Oh, you like the head? Yeah, every once in a while, remember to actually get some time to shave that off. Keep the beard going, though. Hank says Wall Street Bets is a good resource. I don't know. I think they're probably about to have their rear ends handed to them sooner rather than later. I think they're about to find out why the market isn't for amateurs. you know, or you know, why other time frame traders call retail liquidity. So this should be interesting anyway. It's definitely made for an interesting year so far, right? I mean, everybody was excited about 2020 coming to an end. They were like, man, can't wait for 2021. And I kind of half jokingly said, yeah, you know, it's better the devil you know, right? And here we are in 2021 and the market's just getting crazy. Everything getting crazy. Myanmar, they're having the coup right now with the military there taking over. Lots of stuff going on. Hey there, Onorolo. I can't even say what's going on. Checking in from London. Good to see you. Esteban's here. LXT checking in from Austria. Not Australia. That is a different place, folks. The Australians and the Austrians will have your throat if you confuse them. Let me see here. Is that... Avatar Mike. You're also from the Netherlands? Awesome, man. Glad to have you here. Let me see here. There's no gravity on the moon. When will retail come crashing down? Hey there, Mechanic. Good to see you. Wazobia checking in from Nigeria joined us with Tier 3. Love to have you, man. Nigeria is another place where we seem to be starting to get more and more people from. And that's really exciting. Again, man, you know, I've grown up all over the world, guys, so I absolutely love that we get members from all over the world. It just helps me with, you know, what I'm used to as I was a kid growing up. So, let me see here. What's going on, Mike W says, I'm trying out trading on the RSI. What do you think of that? The RSI, it's good. I mean, it's my preferred momentum indicator. You know, as you can see, I usually have it there with the Stochh RSI. People ask, well, why do you have both? Well, you have to understand the RSI is a derivative of price action, which means your RSI gets its plotting based on your price action. Your Stochh RSI is a derivative of RSI. So it gets its plotting based on what's going on with RSI. So basically, when you look at this, if you've ever driven a stick or a standard in a vehicle, you can think of your RSI as your speedometer and your Stochh RSI as your RPMs. So your RSI tells you what your momentum is doing. You know, is price heading up or down, and what's kind of the momentum there? Is it changing? Stuff like that. It can give you a heads up about that. And then your Stochh RSI tells you how strong is that movement. So that's why I like using them together myself. But I'll be honest with you guys, Stochh RSI, I mean, it's just one of those indicators. Honestly, for me, it took me a while to really get used to and get comfortable with. It really did. It was frustrating at first for me. But you know, after being dedicated to it for quite a while, trying to figure it out, I finally became comfortable with it and how it worked. The one thing I can definitely advise you guys not to do, first of all, you don't need 78 indicators on there. Now, I often have different ones on here because I have so many people looking in, and some things make more sense to others than other things. So I tend to put them in there. But really, guys, you shouldn't have a whole bunch of indicators on there. Just pick something and stick to it. All the indicators basically work, guys. You just have to stick to it. That's all. But that's, you know, most new traders, they get in there and they'll try an indicator real quick. They won't really put any thought into it. They won't really learn how it works. They won't put any time, you know, spending time watching it, seeing how it works. And then they'll just, you know, and then they'll be like, oh, it doesn't work. And then they'll go on to the next thing 2 days later. None of it will ever work if that's what you guys are doing, honestly. So just be sure that you guys are paying attention to that. So that way you can, I don't know, it's just one of those things that we see all the time, you know, with new traders, and they become convinced that things don't work. But it isn't that things don't work, it's that they've never really given those things a chance. So, yeah. Mike, you're welcome, buddy. Universal, what's going on, man? Good to see you checking in. Sean's here. Oh no, is saying Russian riots too. Man, I haven't even seen that yet. I'm so far behind on my daily news, it seems like, lately. Man, oh man. Farm D, what's up, buddy? Farm D, been around forever with us. Glad to have you checking in as always. Amber Lee, what's going on, my friend? All right, guys. So what's going on? You know, I decided to go ahead and keep this real, you know, taking a cue off the end of last week. And, you know, we've got the different potential counts that are going on. Nothing's changed with those right now. We've just continued to go sideways. So I've just kind of made it into this, we've got this descending channel, which is potentially, you know, a flag kind of pattern here. And then we've got this ascending local channel here. Hey there, Spiral Architect. Good to see you. Now, the two things to remember here is, one, since January 8th up here, since the all-time high, we've actually been in a bearish market structure, okay? What do I mean by that? That means it's a high and a low, and a lower high and a lower low, potentially a lower high. But the only way this locks in as a lower high is if we get a lower low below this one over here at, this last lower low here at 28,732. So if price drops down below this, then we have a high, a low, a lower high, a lower low, a lower high, a lower low. Locally here, since about the 21st of January, we've got the potential bullish structure building here. So we've got a low, a high, a higher low, a higher high, potentially a higher low if price goes above this higher high here at 38,570. So what does that mean? That means that technically we are bearish from the all-time high right now until price gets above this last lower high here. Again, high, low, lower high, lower low. So if it gets above 40,127.66, I think that, you may decide earlier that you're long and whatever, but I think once it gets above there, I think there's little reason not to be long. Okay? Until that point, you're still in this bearish market structure and you're still susceptible to falling down. Now, locally, what does that mean? Well, so locally here, if price drops down here below this swing low, remember this is a low, a high, a higher low, and a higher high. So if price here drops down below this last lower low at 29,156, well, at that point, that closes this potential bullish structure here. Because at that point, now you have your low, your high, your higher low, your higher high, and then you have a lower low. Okay? So those are really the big ones. So as we continue to move in here, right now we're trying to advance off this previous resistance support area here. Trying to get it, if it can get above the pivot and close above this 34,728.57 here on Coinbase. If it can get above that pivot and above that, then to me that increases the odds that you should at least target this descending channel resistance. Potentially the R1 pivot. So right up here around the mid 37,000s to 38,000 area. 37.4 to 38,000, 37.5 to 38,000, depending on how long this takes to get up here. Now, that doesn't guarantee it's going up that high, but it does increase the odds. It should add confidence to that idea that maybe it's headed up there. And then again, once we break through this, if we break through this descending resistance here, then based on this channel, based on the height of this channel, you have a pattern target of $11,000 above the point of breakout. So what does that mean? That means price, if we're breaking out, say, I don't know here, over the next few days, right down here around 37.5, maybe somewhere right around there. That means we're looking at probably about 48,500 for our target. Now, the thing about that is that's so close to 50,000. I think price is going to attempt to reach 50,000 at that point. Now, will it reach there or not? I don't know. It could be front run. But that's only if you get the breakout here. I would never advise anybody to ever go long right here thinking way up there. You got to go in, you've got to go in levels here. If you close above the pivot, then you need to look at that swing high right there. If you can get above that, then you look at this, descending channel resistance here. If you break out of there, you can start thinking higher up there toward that target, that pattern target, but you still have to make sure that you get above this swing high right here. And that's how you trade, folks. It is not about, trading is not about consistently buying right down here at 28,732 at the very lowest price and riding it all the way up to the very highest price. You might get lucky in your trading career and do that a few times or pretty close to it. But, I'd say probably 98% of the time, you're never going to get that. So what does that mean? That means if you're trading, trying to do that, that means you're wasting your time and you're going to lose money. I keep telling everybody, stop worrying about what the lowest and the highest prices are. Just make sure you're entering on a higher confidence trade somewhere in the middle. So, and again, instead of, if you didn't get down here, you want to know where a higher confidence trade is? It's something like this here. See this descending resistance, this channel kind of thing going on here? Let me throw this and make this dark here real quick for you. I'll make it red right there. Ah, it didn't show up. Ah, dog, I hate when it does that. It only shows up on certain time frames. See, we do red here, and then we'll make visibility. There we go. So right here. So your higher confidence trade is basically the breakout here. It's not here. Unless maybe you've got some kind of divergence showing up there. And in this case, you actually do. If you noticed this right here, this higher lows here with the lower lows here. So you've got this, I'm sorry, right here, lower lows here. You basically got that bullish divergence. So you could have gone long off this. That would have been a higher confidence trade. But if you didn't and you're up here, there's your higher confidence trade. And you don't have to get way up here. Just get some of this right here. If you can consistently get some of this right here, 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 I'll tell you what, right now, you're going to get where you want to go in terms of wealth. You know, your targets, how much money you'd like to make eventually. But the more you try and think of how quick can I get there, you turn this into a get-rich-quick scheme. You try to, or you turn it into a casino or a lottery. You know, you're going to have about the same results, which means somebody's going to get lucky every once in a while, but at the end of the day, the odds are so significantly against you that it shouldn't be the way that you trade. If you're buying a scratch-off ticket, you absolutely have to understand the odds are so significantly against you, you're probably not going to win anything. So it should just be bought with money that you know you're very, very likely going to lose. You know, so you buy for the entertainment value. If you're trading, you need to think of it that same way. If you're trying to get in, if you're trying to use it as a get-rich-quick scheme, if you don't know what you're doing and you have no desire to learn what to do or how to trade or risk management, the importance of it and what it's meant by that, all that fun stuff, then really, hopefully the only money you put in there is something that you really don't care to lose at all, that it doesn't make a difference to you at all if you lose it. Otherwise, you're just going to end up really, really hurt. The problem is a lot of retail, they don't do that. They put in a lot more than they should ever do, and then they lose it, and then they're hurting even worse than they were prior because they were trying to get rich as quick as possible. That's not what the market works, guys. And I know, and you go, oh, but look at GME. Look at that guy who turned, whatever it was, however many thousands into millions or whatever. And like I said, some people get lucky. The problem is retail focus on that one or two people rather than the other. If there's 100 people, 2 get lucky, 98 of them don't. But retail focuses on the 2 that get lucky, and they put all their hopes and dreams in that. You can't do that, guys. You're going to lose money day in and day out. And I'll continue to tell you guys this forever because it's one of those really come to Jesus moments that retail traders need to have so that they can start to hopefully trade more successfully. Let's see here. Hey, Silvio, good to see you, buddy. My weekend was great. Thank you, sir. Let me see here. Again, with the idiots trying to advertise their sites. It's so stupid. Hey there, Brian. Good to see you. Let me see here. What's going on, TV Canal? Chemo is here as well. Let me see here. Hank says, so you're saying there's a chance. Yeah, Dumb and Dumber, right? Think about the name of the movie, Dumb and Dumber. So you think there's a chance. So really, guys, the rather than thinking you're going to grab, especially if you're new, guys, especially if you're new, to think you're going to grab right here at the very lowest price and ride this up, to 50,000 or 100,000 is really, really wishful thinking. If you're able somehow to get in way down here at this low and you're able to hold on through and price does go up and you don't sell somehow along the way, just understand it's luck. And I know you want to go, oh, no, I'm better than that. No, you're not. None of us are, guys. That's the reality. I'm not saying that I am. I'm not. I don't tend to be. I'm not interested in doing that. I did all my stupid retail trading stuff, decades ago. I'm tired of that. I'm just tired of losing money. Concentrate on looking for your higher confidence trades in the middle of the movements, guys. If you can do that, Time and compounding makes everything work. Time and compounding, increases your capital. But if you can't lock in profit consistently and minimize your losses intelligently, there's absolutely no way you're going to make money in the market, guys. And if you do, and if you happen to get lucky, most of y'all out there, again, it's never and always everybody, but most of you, significantly most of you, will end up losing it all back and more into the market. It's just like a casino, guys, when you do it that way, okay? Let me see here. So, this is kind of where we're at the moment here. 4-hour crossing bearishly here, but it didn't quite get up into overbought. RSI here is sitting there at about 50 and a half, which is neutral. So we're going to have to wait and see what happens here. Again, there was the pullback off the 1 hour this morning because you had this higher high here. And then I don't think we had, I need to check this now. I checked it earlier. I didn't think I saw it, but let me see. It's a 34.814.59 and then 34.728. Yeah. So lower highs, and we had higher highs here. So that's hidden bearish divergence. And that just basically means continuation of the bearish trend. In this case, it's the 1 hour trend. So, from here, we'd expect it to continue down. But you can see here, we have dipped into oversold, trying to cross bullishly right now. But again, RSI is kind of sitting there at about 48 and a half. So it's still neutral. Nothing really going on there. It's in a downtrend off this hidden bearish divergence. Now, what's the important thing? So let's look at the monthly here, guys. We were talking about it last month, and I kept giving you some scenarios based on it. Here's the deal. At the end of the day, it's not a pretty candle, but it could have been a lot worse. And had it been a lot worse, I would have been much, much more, leaning like, yeah, it's really signaling that's probably going down. Right now, I think if you're not cautious right now, I think you're not doing it right. Again, if we look at price action and volume here, volume is probably about 40% more, maybe twice as much as the volume in December here. But look at the candle spread, the candle bodies here. You have this bit of volume down here gave you this huge $9,276 candle spread here. But then you have this volume, which is almost 50% or almost 100% more, right? It's almost 100% more. And you only got $4,147 a candle spread there. So almost twice as much volume, twice as much effort, and you got less than half the result. What does that tell you? That tells you there's a significant amount of supply coming in here. And so you notice it comes in here at the R1 pivot here on the weekly and the monthly there. That's significant. That's something to watch. We can look at the TD sequential here. Remember, back here in December, we had the TD9. This could be that last push up before it comes back. It's very possible, guys. If you're looking at this and you're not at all concerned about a potential pullback, at least to the pivot here at around 21,000, almost 20,920 or so. If you're not in the least bit concerned about that, you're trading emotionally. This is very real what's going on here in terms of volume and price action. Everybody says, oh, look, all the big boys are coming. All this money's coming in. But look at all this volume here. Remember, this volume, the volume spikes are the big boys. This is what they can't hide. They cannot hide when they're coming in and getting out. Because they have so much size. It shows up in the volume and price action footprint. That's a lot of, guys, this volume right here on Coinbase is greater than the height here in December of 2017. It's greater than the low down here at the bottom. It's greater than the low down here at the March low. This is significant here. On the monthly, we've got bearish divergence here from this December all-time high of 2017 to now. We've got Stochh RSI topped out over here since December. And so now it's trying to cross bearishly here as it's up there. I wouldn't be surprised to see that pulling back and have us coming down. Now, it doesn't mean it can't push up into this wick here and then come back. We often talk about wicks and how price moves up about halfway in a wick. If you are new here, welcome. Here's your first big tip about trading. If you get a large wick like this, often price will follow up through about halfway to 61%. And then it'll pull back. So if it does here, again, all you're looking at, the possibility that price might get you up here. I'm just pulling this real quick. Yeah, right there around the R1 pivot here. Right there around 37,000. So what does 37,000 mean on that lower time frame? Let's look at the 1 hour here. 37,000 gets you just basically right to this descending resistance. Right here, a little bit lower. So if we look at this as a count here, and we say, okay, maybe this is a 1, 2, 3, 4, 5. And they've got ABC, ABC, and then we're working 5 up. So we've got an expanded flat for 2, right? So we've got a 1, A, B, and we're working on C up here. If we look at that and we measure from this wave 1 here, I said, what, 37,000 or so? That gets you right up here around the 70.5 to the 78.6. We usually look at that 70.5 is right here in this little black candle spread right here. To me, if we're going up, I think we're probably targeting that area. Could this potentially be a inverted head and shoulders here? You guys know I hate these patterns, but I'll put it on here anyway because it looks like it's maybe making a case for it. But I really hate them because they're too easy to misinterpret, and you can usually find other ways to look at it. But if it does something like that, then your target is going to be the height of this here. So let's see where this goes. It'll be the height at the peak here. There we go. So about $2,500 above the point of breakout. Whoops. And so, if that breaks out over here, oh, look at that. It takes us right up there between the 70.5 and the 78.6, right around 37,000. So I could definitely see this as a 1 and a 2. Everybody getting excited, think it's going to break out, and they try to front run the breakout, and they just buy into this whole bunch of supply coming in. If it does something like this, I would expect to see another sharp move back down below that swing low. And if this is a 1-2, I mean, that really sets up the move down off that. If it is. Again, I'm not saying this has to be, guys. But if you're not aware of this possibility, then are you really trading? Or are you just kind of throwing your money into the market and hoping it goes where you want it to go? If we make it up there to that particular target there, give you a wave 3 at 27,942, a wave 5 down here at 25,746. Now, the thing about that is you're going to have this this pattern target here. Here's the other we're going to talk about. This ascending channel here. A breakdown of that ascending channel should give us a pattern target of about $8,035 below the point of breakdown. So that'll take us right about where that area was. Now, importantly beyond that is all of a sudden, at that point, we're likely to be below this large descending channel. And if we break down from this channel, we have a pattern target of $11,000, the same as we have if it breaks out to the upside. If it breaks down to the downside, $11,000 below the point of breakdown. And that's likely taking you down here around 16,000, 200 or 300 there. So we don't have to really worry about a whole bunch of Elliott Wave counts and whatnot, which is why I didn't put them on here. We can just watch these patterns that we have here and how they play out to see where things might be headed. But again, if we get the breakout above the pivot, and then it continues up above the swing high right here, this local swing high, then we can look at this descending channel resistance as the next target. Now, really, what we're looking at here, we've got two things. One is, let me get rid of that there. One is this 1 hour, this daily wick up here. This is a lot of supply in this wick right here, just as there was right here. Okay? So a lot of supply, and just as there was right here, a lot of demand. There's a lot of supply in here. So, the EQ of that is right there around 36,400. So again, 36,400, 37,000, somewhere around that area. Maybe we get that reversal off that. That would be a pretty good guess of what may happen on that. This is a 3-day here, yeah. As far as the daily goes, the daily pivot is right here at 34,275 or so, somewhere right around there. So you want to see a daily close above it and then a second daily close above that. So then you have the daily close above it, which signals, hey, we might be heading up. The second daily close above that one then suggests continuation, and it gives a lot more confidence to heading higher there. But we could just see a daily spike up or 2 days push up there and then close right back on down on the second or third day, right back down below the pivot. And again, that should have you then looking at least down here if you're doing the pivots. By the way, notice, depending on how long this takes over here to break down, if it were to break down, that gets you right around this daily S1 pivot down here, around 26.5, 26.6 as your target. So again, a lot of confluence in the targets. But not only do we have the daily supply structure here, we actually have a 4-hour supply structure there at the top. And that's about where this would potentially reach, right up in this area up here. It would also potentially get rejected if you're looking at patterns. There's all these different ways of looking at this, guys. I'm showing you a lot of confluence here. If you're looking at this ascending channel here, price would likely then be rejected at the EQ. If it gets above the EQ, well, impulsively, then we usually look for it to go to, channel resistance. If it gets rejected the EQ, we usually look for it to pull back to channel support. And of course, if it loses channel support, then you have your pattern target there pulling it down. Let me see here. Hank says he's very much counting on a retest of 20K, maybe much lower. TV Canal believes we're going to close to 29,000. I don't think bulls have power to hold that line again. Let me see here. Gerardo, what's going on, man? He says a ton of inflows were going to Coinbase from other exchanges to be sold. Makes sense considering that's where all the TWAP buying was happening. Yeah. Again, so again, something we've been talking about for significantly since usually before, but especially since March, was the fact that the real money was coming in around Coinbase. So a lot of what's going on there is worth following. I've seen some mentions about large outflows from Coinbase going to cold wallets or whatever. So here's the thing, guys. And here's the thing when it comes to institutional buying and whatnot. Everybody says, Grayscale bought all these other Bitcoin. No. Most of what goes into Grayscale, if you look at their SEC filings, are that institutions or whatever are coming in, and instead of buying their way in, instead of buying with cash or euros or whatever, they're buying with Bitcoin. So they enter the trust by bringing in their Bitcoin. So they do over-the-counter deals or whatever. They get their Bitcoin, and then they join GBTC with their Bitcoin, okay? Now, they lose their Bitcoin forever in that way, but they have shares of GBTC now. The importance of this is the carry trade. If you guys don't know what I'm talking about, I don't have time to go over everything here right now, but look up GBTC carry trade, okay? The idea basically is that your big guys buy Bitcoin cheap, basically, right? And then they put it into GBTC, and GBTC has a premium. And so then they can't sell right away their shares, but they can sell in like 5 or 6 months. And so this premium gives them profit, off that next 5 or 6 months, beyond what just normally using Bitcoin would give you. So you have to understand the importance of a carry trade with institutions. It's big with currencies. There have been some large carry trades throughout from 2010 through 2020, basically. Carry trades are less risky ways of profiting off movement. It doesn't give you a lot of money, but when you're buying large enough, that little bit multiplied by how large you're buying really makes a bit of profit. And so what do we know about GBTC? We know the premium has been collapsing over the last few months. So if there is no real premium to GBTC anymore, or if it decides to, continue down, or to stay down for a while, that's going to dissuade a lot of institutional buying. Now, what you do is you buy that and then you short your options, basically. So you buy your spot. You get the difference, with the premium and everything when you sell your GBTC 6 months later. But you're also hedging that with a spot short. Future short, option short, however they want to do it. So it's basically as risk-free a trade as you can get. But when you talk about, all this big money coming in, whatever, and GBTC, Grayscale is not buying all this Bitcoin. Most of the Bitcoin that they get is given in by the entering institutions or higher net worth individuals coming in who are just placing their Bitcoin in there instead of having, like I said, to buy with cash. So, again, when you do that and then you hedge, short on your futures, your options, or whatever you're doing there, I mean, it's an easy way to make money. Rinse and repeat. They've been doing this for years, a few years now. So just because everybody's talking, I mean, I don't know. Here's the other thing I think about, guys. Everybody says all this money's coming in, but what is the money really doing? So you've got this spike here, and you've got this spike here, right? A little spike in here, a little spike of buy in there. But then you get this spike up here toward the top, okay? This is selling going on here. This large wick doji here. Comes back down, you buy. Pushes up, comes back down, you're buying again. You're trying to create a bit of a range. If you are a larger individual, somebody that has a lot more Bitcoin to sell on the market, you want to create a range. So you're always buying and selling. At the tops, you're a net seller. So you're selling more than you're buying. At the bottoms, you're a net buyer. You're buying more than you're selling. So they create this range here, pops back up, and look what happens now. These two right here. Look at this volume, right? You can do these 3 candles right here. Look at this volume right here at the top now, all of a sudden. You didn't have that over here. You had it right here to send it down, right? And then you bought, bounced it up, bought again, bounced it up, bought again, a little bit here, bounced it up. And then all of a sudden you sold. You sold up here. Again, remember, your trend is down from the all-time high. January 8th, almost a month ago, your trend is down right now. Everybody says, oh, a whole bunch of buying going on. Well, yes, there was buying here and here, which is how you start your range. You have to sell at the top, and then you have to buy a bit at the bottom to kind of create that range. But look, the telltale thing is what's going on right here, I think, where all this volume is coming in up here at the top. A lot of selling coming in. So we'll see how does it follow out here. Does it continue to print lower? If it continues to print lower here, guys, I don't think there's any reason to think that we're going up, to a new all-time high anytime soon. I think we're definitely looking down into the 20s. And quite likely even lower than that. Because as I showed you on the monthly, there is significant volume coming up here. And that volume is where the big boys play. That's where they are announcing that they're there. They bought here. They're saying, hey, look, we're selling right here. Make sure you're paying attention to that. They sold here. They bought a little bit. Notice down here, notice the volume's really low down here. Didn't really buy a whole lot, right? Went up, sold a whole lot more. Came down, got, bought up on that right there. Okay, great. But now they're up here and significant selling going on. If you are not paying attention to this, you are not doing yourselves any favor as traders. Again, there is no guarantee on where it could go or how high it could go. But it looks to me like the range is being created here. And now with this all of a sudden here coming at the top, it tells me I would be really careful, especially up in this range here. So what are we going to expect? Well, if this plays out as an inverted head and shoulders here and pops up, I would expect to see, again, as I mentioned here, something like this coming off here. A nice, good, strong move back down. Spike of volume up there. And if you see that, I think that really tells you, hey, listen, I think we're probably distribution here rather than reaccumulation. Let me see here. Let me see here. Yeah, Gerardo saying it's why the GBTC premium, what I was talking about earlier, is so important for bullish continuation. The arbitrage doesn't work without it. Exactly. And if you look at, okay, why is price rising? And you consider that carry trade, that arbitrage there with GBTC, and if it's no longer available, what do you have to continue with pushing the price up? Don't give me this retail nonsense. It's not, because, again, we just showed you all that volume coming in last month. Yeah. So a 1 2 1 2. If this right here is, you've got a 1 2 here, and then so you've got a 1 2 and you're working on a 3. So within that 3, this is 1 2 right here, which means you have a 3 4 5 minimum just to get to this 1 2 3. This is the 1 2 1 2 that I was talking about. So in this case, you look at your interior count first, because when you have a 1 2 1 2, what that tells you is you're going to have an overextended wave 3. You're going to have a wave 3 that's subdividing. It's going further than 1 6 1 8. Because here's the thing, guys. If this is 1 and 2 right here, then normally we would be looking for wave 3. Just real quick pull here. Not exact, but you'll be looking for wave 3 at the 161A around 20,906. Okay? But if wave 3 is subdividing, as it was a 1 2 1 2 would suggest, then all of a sudden it goes further, because now you have to look at your interior wave here. So you have your 1 2 right here, which gives you a 3 at 20,000. So the wave 3 of 3 is already lower than wave 3 should have been. So this gives you a wave 5 down here, potentially at 15,669. Now all of a sudden, instead of your wave 3 being right here, again around that 20,000, 21,000, 20,900, depending. Yeah, I'm just pulling this real quick. All of a sudden, wave 3 is actually 15.6, about $6,000 lower. So now all of a sudden you're looking at something like this, and you go, okay, well there's 3. So that means 4 is going to be. Let me get this back on here. Just again, these are real quick estimates here. If 4 comes up to 38.2 as we normally would expect, that means if this is a 1 2, this is your 3 down here, your 4 up here, your 5 starts getting way down here. Now, obviously, as you can see here, that gets us way below here. So I don't think it's quite that big, but I think it does open up. I think you maybe get like a leading diagonal here as an A, potentially. Or you just get a shorter 5 because you had it. Well, yeah, you had this long one here. So, you could get, because of the overextension of wave 3, often wave 5 is going to be equal to wave 1 there. Wave 1 is what? About $12,000 or so. And so, if that's it there, you could have your wave 5 down here actually at around 13.7. And then if you're a bull, if you're bullish on it, that is an A. And you'll have 3 up for B, 5 more down for C. And you'd potentially be looking at, 9,000, probably, closer to 7,000 minimum. But could end up being much lower, again, working on this. If this is something that we've talked about here, it just becomes a really large expanded flat here. But if this is ABC as an A, ABC as a B, you're going to get 5 waves down. So I wouldn't expect it to stop at 13 at that point. I'd expect if this is an A and this is a B, it could be a running flat and end there around 13. But I think really potentially that would head up down below the 3,200. But, with the advance, with as high as this is advanced, it makes a good case for a running flat. And again, that gets you, potentially, look at that right there. That gets you right around the S1 pivot. That 13,000 range, 12.5 at the weekly S1 pivot. And that's also this ascending support here coming off the January 15 low and the March 20 low. So yeah, I could definitely see something like that happening. Sure. It hits this whole area right here where you've got all this, see all this right here? This is support in this area here. There's a lot of activity there. So you get this little bit of, this volume coming out over here. So I could definitely see where it comes down there, boom, and you get this this move down and then continuation up. But I wouldn't assume it's going to end there right off. If you're coming down, you want to see how does that play out. Because, again, with the way Bitcoin, with it being so volatile and everything going on, and then if we look at, I got to get out of here soon, the dollar, if the dollar's rising up there, guys, I don't understand. I don't know how Bitcoin continues to rise up if the dollar's rising up. I've shown you the correlations time and time again. They're basically completely opposite. The DXY is going up, Bitcoin, stocks, or the stock indexes, everything basically goes down because everybody goes to the dollar. The dollar becomes more expensive. And as the dollar is more expensive, it costs less. That means the value of your things, I'm sorry, if the dollar is going up higher, that means it costs more, it's worth more, which means the value of anything denominated in dollars is going to be less necessarily because it takes less dollars to buy it. The dollar is worth more. It's a stronger dollar. It's the opposite of what you guys think about with inflation, which is the more dollars that go out there, the weaker, the more inexpensive the dollar is, which means it takes more of them to buy something. It's completely the opposite with deflation. Dollar rises like it's doing here. It's getting more and more valuable. It's worth more. It costs more to get it, which means, again, it's worth more. So if it's worth more, then anything you're trying to buy is going to have a reduced value. That is as basic as it gets, guys. How does Bitcoin continue higher if that's the case? How does the price of Bitcoin continue to rise in the face of it being devalued because the DXY is rising in price? And this is the one thing I think a lot of people don't really think about when they're trading right now. So, do what you guys need to do, but make sure you're paying attention to what's really going on. It doesn't mean that it can't. I can't tell you that it won't happen. Anything can happen, guys, in the markets. As I've said to you, the only way that I can see Bitcoin continuing to rise in the face of a declining value because of a rising dollar is to have so much more demand that it just sends it up faster than that value is dropping. The problem with that thought, though, is in order to do that, because of where we are in terms of price, you need big money people coming in. And are they going to come in when the value of the dollar is rising, which means the economy is going to tatters more or less? Or are they going to stick their money long dollar T-bills where they can protect it? Historically, they're going to protect it. They're not going to stick money into risk-on assets in a risk-off environment because it means they're highly likely to lose their money. And they're there to protect their wealth. That's why I keep telling you guys, rule number 1 is to protect your capital. Rule number 2 is to grow it. If you're trying to grow it without protecting it first, you're not going to have capital left to grow. Mastodon, what's going on? Oh, you like my beard? Thank you. I appreciate that. Let me see here. So yeah, I mean, seriously, guys, and I say this because I hope that if you're here, you're intelligent enough to actually think beyond whatever emotions you may have at the moment and go, okay, I see what he's saying. I see the reality in what he's saying. Again, I'm not guaranteeing that Bitcoin's going to go down with everything. I'm saying the odds are that if the DXY continues to rise, that Bitcoin's going to go down. Historically, it's shown that's what happens. It's a risky investment. Risk on investments like that or trades like that people tend to exit the market out of those when the economy, when it becomes a risk off environment. Risk off environment happens when the dollar's rising. This here. We've been rising here. Now, again, there's no guarantees that this is the bottom here, but it's really making a case for it. I've got us as a 1-2 right now, working on a wave 3. Interior here, I've got us a 1-2, working on a 3 up here, around 91.7. Now, what are some important areas to look at here on the dollar? Again, we're going to look at wave 4 over here, which is 91.018. If we can get above that, we're almost there right now. If we can get above that, then that's a good first clue that the bottom may be in. This big descending line here, this is the descending resistance from back in March, where we had that spike up there, remember? This one right here. So it's touched up there in March 20th of 2020, and then again here, November 3rd. So we've already got 2 touches there. That's a solid line. So an advance above it really kind of adds a lot of credence to the idea that we're probably bottomed. And so a breakout of that's going to take us up here, based on the height of this, up here around 100. Which takes us back into this area right here. Now that takes us, more importantly, above this large wave 4. So if we've got this as a 1, 2, 3, 4, 5, getting above this wave 4 should leave little to no belief at all that price is going any lower. If this count is correct. If the count is correct. But it is a significant high to get above. You can notice right here, it's right here. So if we look at this purple line that I've gotten here, notice how if we go back here, notice how this works as support and resistance all along here. Right here, general area, right? So again, getting above that puts us above that and, above that support resistance line there, which significantly increases the odds that it's heading up higher from there. Take out that swing high, we really start looking up there. And, this brings in a whole interesting thing here, because if we move out, do we get this right here? We've got this beautifully drawn channel here. Look at how beautiful that EQ is right there. And if we break out of that, then based on the height of this, we would have a pattern target of 50, basically, above the point of breakout. And that could take us way up here. Now, I'm not saying it's going to happen. I mean, that's really a lot. I have a hard time digesting this. But we can work on the lower terms here, and then we look out and say, okay, what's going on with everything? Because it's not just, everybody goes, oh, the U.S. is printing all this. So inflation coming. But, and it's doing so bad. But they don't look at how much everybody else is printing. How much is the EU printing? How much, or, how much is the euro, how much of the euro is getting printed? And when we look at that, I've done something before where I've shown you some comparisons of that and gross domestic product and all this other stuff. And the U.S. is actually nowhere near the top. Japan's above it. The euro's above it. So remember, these currencies get their value based on other currencies. How do they fare against other currencies? Oh, man, I was hoping to make it through this without that. Sorry, guys. Cedar around here. So as long as the dollar, everybody can continue printing, but as long as the dollar's doing better than the rest of them, the other ones that make up, the DXY here, the weighted basket, there's no reason to think that it should end up worse. As long as it's still doing that. By the way, you can notice we've got these lower lows here on this is the monthly. Let me kind of close it here. We've got higher lows. We've got lower lows right now. So potential hidden bullish divergence printing right here, which means continuation of the bullish trend. And on the monthly, that would be this trend right here. So, hidden bullish divergence should kind of say that. Stochc RSI about to cross bullishly here, it looks like, trying to. We'll see what this month does for it. Down and oversold. It's got room to drop to the S1, but if we zoom in here, where's the daily here? right here. So if we're looking at pivots, we're moving in sideways between the pivot and the R1 here on the daily. So we should be looking to potentially get up here to the R1, which would get us right around 91.28. And potentially a pullback then, maybe to test the pivot and then head up higher. But we'll see if this is really bullish in this area. If it's really bullish, like we've shown on Bitcoin, it'll push up through the R1. And in that case, there's no reason to even be looking down anytime soon. At least not over this next month. Matter of fact, if it runs on through this R1 without pulling back through the R1 and especially through the R2, there's no reason you shouldn't be looking at the R5 at that point. And that again gets us above this other R4, the big wave 4 swing high there. But it's got to do it, guys. I'm not saying it's going to. Right now, locally, it's broken out of this descending channel here, this flag. It's got a pattern target of 91.25. So, we'll probably, I would think we'd hit this area up here on the lower time frame, pull back, and then fire through and kind of rocket itself up a bit. Let me see here. Hank says if it doesn't reverse before 92, then he will give up on his mid-80s. Until then, nah. Will the Wall Street bets crew mess up your silver short, or will they fail to take it over 30? Oh, no, I've already updated the count on that. I'm about to post it there for Discord today. So, yeah, it just required a small adjustment. Nothing huge. But, again, it was something we were already looking at as a possibility if price went above that swing high. So, no real big surprise on it, honestly. We'll see how it continues to play out. But right now, still looking corrective overall. Especially if you look at the RSI and the bearish divergence that's forming on the larger time frames. Yeah, and RSI up there. So, yeah, Tell You Where it says WSB isn't doing silver. I don't think. I saw an article and I couldn't find it. I was trying to get through stuff this morning, looking at those headlines, and I've got to find it again. But there was an argument that they hadn't actually gotten into silver. And so, that would mess up everybody's thoughts. Oh, they're doing all this with silver. I've got to find that and read exactly what the individual was saying. But yeah. So, yeah. WSB is all saying that silver is a fake story and it's all still GME and AMC. Yeah, and some of the crazy stuff. I mean, you guys got to look at this. They are completely emotional about it, which doesn't usually bode well for them. I saw I think one of our members in Discord posted a screenshot of one of their Reddit takes there saying, you're soft and you're all these bad words, all these rude comments. If you sell, and you shouldn't sell, you should hold and you should buy more at the dip. My God, guys, if you are trading with that kind of mantra and not locking in profits, you're just asking to lose it all. And think of how terrible that would feel if you make all this money that you could have locked in and stuff goes sideways the other way because either the person who's trying to push you to do it ends up selling, because you don't know what they're going to do. They say, oh, yeah, I'm going to hold until whenever. Whatever. Yeah, nobody's going to. No. People are greedy. They want to lock in their profits. And so, I would never trust somebody saying they were going to, especially if they're trying to lead you, saying, oh, I'm just going to hold until this time, this time, this time. You guys got to do your homework. You got to learn to trade yourself because people like that will rip your money from you every day. Don't let them do that. Gosh, man. I hate it because right now, this is one of those things that happens in trading every so often. If you're retail, you get lucky like this, right? And then you don't lock in your dang profits and you lose it all, and maybe even more because you keep trying to buy that stupid dip. And man, you could have done just life-changing money, could have really done things for yourself. And you didn't do it. I hate that. Because it happens often enough, guys. Don't get caught up in that. Take profits along the way. Be smart about your trading. So, yeah. Yeah, I don't do requests today. I'll do requests on Friday. By the way, guys, don't forget, we're going to start transitioning this show into twice a week on Tuesdays and Fridays. And we'll go over all the markets on both days rather than Mondays, Wednesdays, and Fridays the way we do it right now. And that way I can continue to add more of the stuff that we're adding for our members over at TWC. Because at the end of the day, you know, they're the ones paying, and we're trying to do as much as we can for them. But we'll still be twice a week, guys. We'll still be twice a week. And like I said, Tuesdays and Fridays. And we'll have, you know, all the markets we'll be talking about then. But if you want up-to-date daily stuff, whatever, if you want some great traders, man, join us over there, man. It's not even me, man. It's the people that are members there that really make it a great place to be, honestly. Like Brian says, Tier 3 is where it's at. I think so as well. We keep trying to add as much as we can to that. But anyway, guys, this is kind of where we're at with Bitcoin and the dollar here. I think we might be heading up here toward this upper level up here around 36, 37,000. But I would be careful, potential strong rejection. If we get rejected in that area, I think it's going to be a strong one. Like here, we kind of head on back down below the swing low over here. If, however, I'm going to keep telling you guys, I'm not just telling you it's going to do that. Remember, I told you, if it gets up above this descending channel resistance, you have a possible $11,000 target above that. But you want to make sure that it gets above this swing high right here at 38,570, and especially above this one right here at 40,000, whatever that was right there. What is this one right here? 40,127. Those are your markers you want to get above if it continues up through this. Those add confidence to the idea that this is a good flag and a good $11,000 target, because it could still get above this line and kind of turn around and roll back over. Just because we have this drawn on here as a flag doesn't guarantee that it has to go up like that. Okay? So just watch it. But, oh yeah, look at a higher volume node right there as well. I just now noticed that. So just be careful if you're riding this long, that around, up here at this $7,000 kind of area, just make sure you're paying attention. If you get a strong rejection off there, you don't want to lose the profit that you've made on the way down here. Worst case scenario is you have some kind of trailing loss. It takes it out, and then it heads up higher. So what? You miss a few dollars here. On a good break out of this descending resistance, you've got a chance. Another chance. You enter on however you play that breakout. You enter that looking for higher up, especially if you get above a local swing high and this one over here. But until it does that, the price is susceptible to further downside, especially with, as we mentioned, here on these lower time frames, you can see the volume coming in at the top up here. And then, of course, jumping in there to the monthly, you can really see that volume showing up there. This is not retail aggression. Well, this is the big boys selling into retail right here. Because if not, with all this extra volume, look at guys, here's the way you read this. You go, oh, well, that could just be a lot of buying going on there. Well, there is a lot of buying, but there's a lot of selling. That's the problem. If there wasn't a whole bunch of selling going on here, then this big increase in volume should add to a big increase in candle spread here. You should have a larger candle than what you had here. But you don't. You have a much, much smaller one with a large upper wick. So you absolutely have to be careful. All right? So, there we go. I'm done here. I hope you guys have a great day. You trade safe. Remember, you can still join us at howtotradetowin.com. Whoops, that's not it right there. That's it right there. And like I said, it's through the end of tonight, so 11:59 p.m. Central Standard Time tonight. That coupon, I did check it. That is when it will expire. So you've got this one last day, I guess, to kind of jump in there and grab a hold of 25% off and join us over there, guys. It's all about the education. And I promise you this much. In Tier 3, we've got more content there than you can actually absorb in a month right now. With all the normal educational stuff we have, the Tier 3 weekly educational stuff, which you get all the archived weeklies that we've done for 5 months now or whatever we've been doing it. So a lot of education on there, guys. If you don't know how to trade, the weekly Tier 3 is great because it gives you all these definitive ways to trade. It tells you, listen, so if you're going to use this particular method of trading right here, this is where you find your entry. This is where you find your stop loss. This is where you find your target. You don't have to think about it. It's all there for you. So you do that while you're learning how to actually trade and how bigger market really runs and whatnot. So there you go. Yes, definitely perma-beard. I hope you guys have a great day. You take care. Really trade safe out there, guys. And you know what? If you're not taking time off from the charts, make sure you do. You cannot possibly sit in front of the charts 24/7 and trade well. You have to relax, guys. You have to reset. You have to. It's like work. You can't go into work 24 hours a day, 7 days a week, and be just fine. You're going to be stressed out, emotional, tired. Same thing when you're looking at the charts, okay? So make sure you guys are taking some time away. Come on back. It's okay. All right, guys. Y'all have a great day. If I don't see y'all in Discord, then we'll be back on Wednesday at 11 a.m. Central Standard Time. And again, we'll talk about Bitcoin and the dollar then. And then, of course, on Friday, we'll talk about all the markets. Have a great day, everybody. Take care. Remember, the only thing you control in the market is how much you lose. That's it.